Done, yeah. Okay. So today we have a very interesting topic, FIRE with mutual fund, right? So before we head into things, uh, let's understand how market cycles work. This is there on every presentation, and the whole point is how does Milestones to Wealth actually help investors? So Milestones to Wealth is a strictly behavior-oriented program. It's not a platform that gives you buy and sell recommendation like a broker. It is a behavior oriented program where we work with investors to help them reach their entire potential, right? Where we set milestones uh, and we help them reach their entire true potential, right? So it's a behavior oriented program. Now, uh, what does this chart say? So market cycles are long. There are shorter cycles in a longer cycle. And in every cycle you see at the bottom, you will hear that the people are telling you to buy, to sell, because there's a lot of fear and there's a lot of pessimism in the market. Fear, everybody will tell you sell, sell, sell. Everybody is very happy. There's so much, everybody is making money. There's more greed in the market. So everybody will tell you buy, buy, buy. It's more optimistic scenario. So as and when optimism starts getting a lot more higher, you will see many people telling buy. You get recommendations from every single person. I did this. This worked for me. Why don't you do this? Right. But what actually happens is that when there's fear is when participation levels from you need to be very high. And when there's greed, participation levels need to be lower than what it was when there was more fear in the market. Right. Again, I'm stressing on the word participation. Your participation, if it has to be on the higher side, needs to be on other asset classes, somewhere where the market cycle is flipped. Right. So always look for opportunities, and Milestone shows will always help you look out for opportunities so that behaviorally, right, you show the right amount of character, you show the right amount of discipline, you show the right amount of consistency, right? That will help you reach your particular goal, that will help you reach your particular milestone. Now I'll ask you a question. What is FIRE? You can put it in the chat box. What is FIRE as per your understanding? You can put your answers in the chat box. What is FIRE? Yeah, financial independence and retire early. Right. So financial independence and retire early. So what does this actually mean? So when you go out and Google, say, yeah, what is FIRE, and then you'll get some tips, right? You need to do this and you need to do that. But what does financial independence retire early actually mean? This is uh, what you get search results out of FIRE on Google. So if you see, FIRE is built on three fundamental pillars, right? This is from a book called Your Money or Your Life by Vicky Robin. It provides a roadmap to achieve financial independence and early retirement, right? So what does it say? Save 50 to 70% of your income, which means that never spend money. Second, live frugally, minimalistic lifestyle. That's what they say, right? Invest wisely, preferably in a low cost index fund. So basically, do nothing, right? But that's not how you can do or achieve FIRE, right? I've highlighted the part that to achieve this you must live frugally. I've not highlighted the frugally part because we are all aspirational Indians and we all definitely want, a certain amount of lifestyle, though that lifestyle can be controlled, though that lifestyle definitely can be put in check, which you must, right? So what I've highlighted is that you need to plan your expenses carefully, and once you plan your expenses carefully, whatever you're able to save must be invested wisely, must be invested first is save and second is invest, right? So this is what Milestones 12 was actually built on. So Milestones to Wealth was actually started to help investors achieve that FIRE by setting milestones for them. So let's say if somebody is having a milestone of 5 lakhs and somebody has a milestone of 50 lakhs. So the level of work that we do for a 5 lakh milestone versus that of a 50 lakh is vastly different, because the 5 lakh one would require a lot of effort in the beginning of their savings career, their savings journey, than a 50 lakh, because by the time you're 50 60 lakhs, you will already know that, okay, how do I get to get a crack on my current expenses? How do I make sure that I'm saving in the right manner, right? So how to achieve FIRE? Milestones 12 clearly has only two steps. One is to create a savings habit, right? Think about saving every day. Whatever you can do from your bit, you must save, right? I'll give you a live example, right? I'm 27. I also want fire. I also want to achieve fire, and it's not easy with the current lifestyle that I am. As to okay, I have to cut a lot of things. I was going through my expenses, for a couple of months. I maintain an Excel sheet where you need to keep a track of all these expenses. And I realized that the cost of my food and the cost of my outings has gone up. Though that the number of times I am doing this has not drastically gone up, but the cost of all these things have started to go up for me and is hitting my wallet. I saw a movie on Sunday morning. Yeah, I went for a Sunday morning show, Deadpool, and for just a person, for I think two people, it was popcorn came up to 1,200 rupees. I said that 1,200 rupees on popcorn. So that got me thinking, okay, these are where my expenses are very it's going high for now. That I can just generally avoid that expense, right? That I can save that 1,200 rupees, and ultimately at the end of the month it's more kitty for me. If I just don't eat popcorn for half an hour, it'll be fine, right? So think about saving every day. Think about where most of your money is going, and try to cut those expenses off, right? Review your savings every week. I was able to come to know that, yeah, okay, this week for me is high because this particular expenditure for me came in, and could I have avoided it? Yes, definitely I can avoid it. So that's helping me create a savings habit, that's helping me strive to do more, right? So once that savings habit is sort of getting created for me, once all of these things are taking place in my mind, it's creating an investment habit for me. I'm able to save on a monthly basis. Right. I'm able to save surplus. I'm having a lump sum at the end of the month, at the end of 2 months, at the end of 3 months. I'm having a big chunk where I want to invest and definitely put that out for my retirement kitty. Right. So set up a monthly SIP. Whatever surplus you are able to get at the end of the month, or a bonus that is coming to you from your job, try to put that into the market without thinking so much of where I'm putting it. That is our job, to see of how things are taking place in the market. Your job is to make sure that you are always reviewing your savings, you are striving to do more, and in turn help that create that savings habit and lead it into an investment habit, right? So step up your SIP whenever possible. Usually we say that at the end of every year you must review and see that as your salary grows, as your bonuses come in, you should be willing to step up your SIP whenever possible, right? So let's see what are the few things that you can do, right, that will pay off for you. One, have a budget. Second, insure yourself. Third, diversify your savings, manage your loans well, and have a particular milestone and a goal. Say, I want to do this for my future. Right now, we are considering retirement, but I think in the 11 o'clock to 12 o'clock session, Archana spoke about education as well, right? That's also a very important part. If you have kids, saving up for their education also is very important. So, what does this mean? Which means, what is it that you have to do? One, by planning, you have to save more. Having a budget means you have to your end goal of that budget is to have something more coming up at the bottom line. Second, you have to be very disciplined. You have to ensure yourself. That's the first line of defense. If you don't have a term, you don't have a health, you don't have a life, then it's going to be very difficult for the people around you to survive after you. So always make sure that your first line of defense is built. If you don't know whether you're adequately insured, send us a hi. I have put the number at the end of the presentation. Send us a hi. Our insurance team will get in. Archana also is part of the insurance team. Swagat is part of the insurance team. They will get in touch with you. Make sure that you're adequately insured. Even if your employer has you're part of that group insurance, that's still not going to be enough for you. Have something on top of it, because let's say you quit your job and you go, then that's of no use, right? So you must have a mixture of both, and your first line of defense has to be very strong, which is your insurance. Third is being consistent with your, after you save, being consistent with your savings, right? Your investments, your SIPs need not be stopped. Rather, if your SIP starts to go higher, which is you're stepping up your SIP, you just need to channel it in avenues where there is no valuation risk, where you're being conservative in what you want to pay for a particular business, rather than choosing whether I need to do a small cap, whether I need to do mid cap. That's not at all your, that should not be your point of discussion at all. Your job is to make sure how can I completely start saving more and channel it into avenues where there is conservative, where there is no risk, where it's being taken at a conservatively uh, valued businesses, right? Fourth, avoid credit spends. It's very easy to swipe your card. Avoid doing that, because that is giving you the liberty to feed into your aspirations much more faster than when you actually should be doing. So avoid your credit card spends. Uh, don't try to swipe unless and until necessary for you. Otherwise, again, that would feed into your savings. That would again come off, and you'll not be able to save more at the end, right? So yes, home is an aspirational, emotional point, but make sure that you've saved well enough on the equity kitty, and then only move into such asset classes that demand a higher mindset, that demand more of your mind, that demand more of your body, right? Most importantly is, if you want to plan for the future, then you have to set a particular milestone. Now we have this in our program. When somebody starts off from 2, we move them to the next one, then we start setting the milestone for the next one, and the next one, and the next one, and the next one, until you reach a crore, and after that you set your milestone for yourself, right? But until you reach a crore, we will be setting that particular milestone for you, and we will be hand holding you for each of that particular milestone that you do. So savings part is on you, investing part is on you. Where to invest, how to invest, that's on us. Setting that milestone, helping you get to one particular milestone to the other, is on us, right? So let's look at the asset and asset classes. So cash is liquid. You always must need to be safe with it. Always try to have 6 months of your expenses in cash, right? Gold and silver, cash proxy, it is an inflation hedge, it loses value, but treat it as an alternate to currency, right? So it should be 5-10% of your entire net worth, right? PF, 20% of your net worth. It's meant for capital preservation, it's not meant for growth. Only growth is equity. So that is risky, but it's not suited for your short-term goals. Whatever you want, you need to do something on fixed deposit side or arbitrage. That is a proxy to short-term, right? Real estate is a financial and emotional security. Yes, it gives you financial stability. It's capital intensive. So it needs to be only 40 to 60% of your entire net worth. So amp up your financial assets, amp up your contribution towards financial assets. That ultimately would lead you into creating more and more physical assets like gold and real estate. So that will start taking place for you. But amp up your financial assets part. It's liquid, and it gets the job done if you're very conservative and you're very consistent, right? So if you look at how you can get to a crore, right? Now, let's say if you're doing 70,000 rupees every month, that is growing at 12% per annum. It's a moderate sort of an estimate. 9 to 12% is a moderate estimate, right? So is it easy for you to reach that crore? Yes. It takes you 8 years to reach a crore, but actually when we set up 1 crore milestone, what we are actually setting you for is a 5 crore milestone, because by the end of the 20th year, you are already adding 1 crore every year, because you're consistent and you're disciplined, and all your old money is actually starting to work for you and have a larger impact on your wealth creation, right? So by the end of the 20th year, you're already at 5 crores. But your first, when do you reach your first crore? If you're just being consistent without adding more, without doing anything, and you're just able to grow somewhere between 11 and 12 or 11 and 13%, you're able to do this within the first 8 years. Then up until you reach the next crore, it's 4 years, and the third one is in 3 years. So you see that the time is getting cut. At the same time, your discipline and your consistency is actually rewarding you. So fast track your journey to 1 crore by being consistent. Don't try to do FNO. Don't try to do anything of this sort, but just be consistent. Like, be disciplined, have your savings intact, have a proper budget, review the budget. Mainly is that we see investors, they don't review their budget, they don't review what they're saving, they don't go back to see how things have changed. And once you're aware of how things have changed, once you're aware of how it's hitting your wallet, only then you will start to take better decisions, which will in turn help you save more and help you invest more and help you reach that 1 crore much more faster. Right? So, how do you make FIRE possible? Do more, stay invested, show, maintain patience, understand their potential, and grow up. This is how you can get to FIRE. Uh, don't go on to social media, don't go on to YouTube, or don't go on to search saying how does everything has to be tailor made. And main thing is that you have to spend the time, a lot of time, for you to understand your potential. So one easy thing that we have done is we're taking financial understand your potential. It makes you aware of your potential, and it gives us a direction of how we can sort of grow your potential. That's why insurance first becomes your base, right? Main thing is, when we take that financial health checkup, and this we do at the start of building a relationship with you itself, where we make you take a risk profile test, where we understand the ability and the willingness uh, of an investor of taking risk. Second is the financial health checkup, where there will be a lot of details that you have to fill, and then once we get a particular number, we make you aware of how that number has come into place, what has impacted that number negatively and positively, and how going forward we can improve upon that particular number, right? So making FIRE possible is, you can only do that once you're very aware, and the financial health checkup will help you do it. So understand your potential, grow your potential, do more, which is save more, stay invested, which is consistency, and just be calm. When there is a meltdown, when there is something like that, then we can have a conversation at that point of time. But until then, there's no point of you getting very anxious, getting very antsy. Pockets of the market where valuations are extremely high are majorly on defense, public sector. So you have to be very careful on those sides. Don't try to commit more and more money to chase momentum. If you just start chasing momentum, then all of this, right, FIRE is not going to be possible for you. Basically, you again have to go back and start from the basics, right? Rather than doing all of these things, start from the basic now itself and have a very fruitful journey towards 1 crore. And after that, you yourself can set that 5 crore target. Right? So what does Milestone2Wealth do? The behavior model is that we love participating in a boring market. So naturally, we will help you to participate a lot in the boring market, where you sort of need to challenge your savings. That's where we would come in. So the model would be majorly lump sum SIP, step up SIP, and in an exciting market, right, where when your goals are met, when your milestone is met, or when things have gotten extremely bad, when valuations are extremely high, then you would see, okay, there's a sell that is coming out from a side. But up until then, right, your job continuously is to be a boring investor and continuously keep saving until you can reap such benefits. Right. So that's the entire behavior model that we follow at Milestones2Wealth. So now I'll open the floor for Q&A. And what if you want me to go through a particular slide again, I'm very happy to do that. And whatever question you have, I'm very happy to take it. So there's a question on more and more, but with more aspirations, we see is greed only chasing returns and running behind equity plus more debt, EMIs or liabilities more than assets. Sad ground reality and hard. See, I think for you, I think a blended approach would work. Naturally, today, if you see, everybody is chasing momentum, everybody is chasing equity because equity has delivered. So that doesn't mean that it won't, or that doesn't mean that it can't. Definitely it can, but from here there is a doubt because there are risks of evaluation. That means there's expectations that need to be met. So if you see in the US, there is a meltdown that's happening because expectations were very high. Not that the growth levels of earnings were low, right? The expectation of growth was high. Hence, you saw a lot of analysts revising their particular estimates, and you saw that share prices also started to go down. So you need to avoid that. You don't need to go into expensive places where analysts are very, very bullish at the first place. That's where we come in, and we'll make sure that all your wealth that is that you're saving and that you want to grow is growing very, very conservatively and very, very consistently. So stability is what we're looking for. Does LTCG and short-term capital gain increase in tax make PMS less attractive compared to mutual funds? No, it's the same thing. It's just that if the strategy of the PMS is more active, the churn is more, then naturally uh, but naturally then your tax also will be sort of higher. But PMS strategies that are majorly buy and hold, where there is not much of churn, that impact will be less. Now, it will be the same. It's very similar. So strategy oriented. It's not that every PMS is the same. It's strategy oriented. So in strategies where there is more churn, you'll have more activity, more more line items for your auditor to look at. But I would say MF is the best way for you to start building wealth. It helps you be consistent. It's a good investment vehicle that you can continuously keep saving in. And we've made our PMS also structured like investments vehicles only, where you can consistently contribute. Right. So our aim is to make sure that the investor is consistent. So everywhere tax the same, doesn't matter. Just that the strategy matters. And uh, to start off by building wealth, you should go towards MF first. During exciting market, if I have a lump sum till boring market comes. See, what happens is it's not that we shun off equity as an. So, for example, within equity, there are pockets of the market that are conservative, that are conservatively valued. I would not say that is very expensive or expensive. I would say it's somewhere between cheap and fair, right? So, a staggered approach is what we take during such times, based on your risk profile, based on your financial health checkup, right? So, the model is built for you to not time it. You don't have to take that decision time. The minute you start getting bonuses, the minute you are able to save more, the minute you have done your part, you give it to us for us to do our part, right? And as that cycle goes on, you'll see, okay, there are so many things that are taking place based on for me that are tailor-made for me. You'll start building that comfort, and a lot of things will start. You yourself will find that comfort and confidence uh, uh, to participate more in any market. So there is a winner and there's a loser in every market. 18 to 22, you saw precious metals like gold and silver actually lead, right? Then equity came in from 14 and 18. Debt was there, in some period before that, including that 2-3 years. I've done multiple presentations to show you a very big quilt. So our job is to make sure that you need to continuously participate. You need to make sure that you are also continuously participating. Could we explain the process? Will your team suggest us mutual fund to invest every month, or do we open demat with your team? No demat. It's purely mutual fund regular plan. We will take care of the entire onboarding process for you, and all transactions go through BSC, NSE, CAMS. So it'll all come under your NSDL. It'll come all in your CAMS. Everything will be with you. So we are just doing mutual fund distribution, right? So we do have based on your risk profile, we will tell you what we can do or what you should be doing best, and you can just start going ahead with that. So we will take care of the execution part as well, but everything will be based on your risk profile. So it's all tailor-made for each individual. So that doesn't mean even if you're a risky investor or having a high risk profile, we will take extremely high risk for you. Whatever options and whatever opportunities are there currently in the market that suit you, you would have that based on a risk profile. Why gold is considered to be 5 to 10% of your net worth? See, this is an asset class that should not be missed out. Today we are in a scenario that there are macro fundamental issues, right? There is a war going on, so inflation is high, and interest rates across the world. It's every man for themselves. Japan will do that. Has done their own thing. Europe will do their own thing. India will do their own thing. The US will do their own thing. So this puts a risk on currency. right? Because sources of capital move from one currency to the other currency, so it becomes a problem. It creates a lot of risk. So you need to have an alternate currency that protects your purchasing power, which means it protects you from all the price increases that can come in, that also appreciates in value. So gold is that particular alternate currency that you must have as your net worth. And second, we have an emotional attachment towards it. We will use it for other things as well. So that's why we consider gold to be a very important aspect of wealth creation. What is the service charge? Is it separate charge or will they? It's just regular, so there's no financial advisory, nothing of that sort. It's through regular funds. We don't charge you a fee. Whatever we get paid via the AMCs. There's no fee that you get charged on. From YouTube. Priya's rich journey. I always like asset allocation in Japan market 30 years no return. Maybe India also guarantee. So I'll invest 40% bond, 40% international, 5%, 10% gold. See, you have to do based on risk profile. Japan is a separate situation. India is not like Japan. See, even when we compare growth, right? India has a separate growth trajectory from the past. So we have to compare India's past to India. Yeah, we can look at how things have taken place there to get inspiration as what has worked for them or what has not worked for them. Can this work in India's context? So for example, energy transition, right? Everybody is talking about how uh, full thing will move to renewable energy. How? Right? So India is one country where everything is sort of working out. There's coal that works out, there's wind that's working out, there's nuclear that works, there's solar that's working. So India is very diverse. So it's not that just because some other country has gone through that, India will also go through the same thing. So never look at it from that point of view. However, look at it from a see, this is for the policy makers to take care of, right? Not for retail investors. For investors, the only thing that you need to think of is how can I be consistent in any market. If equity is high, I need to be consistent in another asset class, right? If that particular asset class has peaked off or there's things are completely against, I need to go to another. How do you be consistent in your wealth creation journey, and make sure that you're able to grow somewhere between, if you grow at 12%, you saw the math. So how do you stick between that number? 9 to 12 is what you get very good opportunities for India to grow at. So always look at it from that perspective. So this fixed of 40% bond, 40% equity, you will have to eventually change it based on a because you have a 20-year or 25-year horizon towards uh, retirement, is what I'm assuming. So you will have to go through multiple cycles. So you can't have the same thing in every cycle. Right. Is multi-asset investment options available in mutual funds? Are mutual funds related to real estate? No, mutual funds are not related to real estate. There are REITs and InvITs. There are, I think, couple of global REIT fund of funds that are there. But a multi-asset option is available in the mutual fund space. They do take care of multi-asset funds. It can be part of MTW. Real estate, no. Hi, are there any examples of people fired through I thought? Please give some real life examples of your customers as well. You can look at our testimonials, and I would also suggest, as you start on our journey and once you achieve fire, you can also give a testimonial. So there are many investors that have worked with us who have achieved fire. In fact, your journey with fire is after retire early is where you have to consistently take contributions out of your retirement corpus for you to live. So we are managing a lot of investors fired wealth, right? Where they are consistently making they have to consistently get something like a SWP for them, as well as making sure that the money that they have saved up for many years that has already been growing has the same level of growth. At the same time, they are able to live off it. So we have that model as well. There are many investors who are doing it. Real life examples, right now I can only tell you to look at the testimonials. There's a question: what to do actively after one reach or attain fire? Sorry, sitting idly is not fire, right? Yeah. So after, see, when there is lean fire, fat fire, then there's one more, two more fires that are there, right? So the point of fire is that when you're being aggressive to retire early, then you should also know that after that there is not a, either you set a higher milestone after that, or you plan on other things. You chose to retire early, you want to go on this path, so naturally there will be a lot of time for you to do other things, and that is on you, right? But for after fire, for us, we will start planning for how you can live off that as SW. More than depending just on returns or investing, is it not very basic for people to learn skill sets and focus on their career, job, and work to get paid more and grow? Because now everywhere people are becoming active investors when they should be passive and focus on their career. So, is it wise to invest in bonds? And with this interest received monthly, we can go with MF. Bond market, debt mutual funds can work. They don't have a payout. It's a growth option or dividend option. We usually choose growth option. And again, on the bond, the interest you will be taxed at slab, which is not very efficient for you. So I would suggest that if you're able to do that, and if you have no, you and your auditor are sorted, you don't have a problem as well, then it works. But bond as a and you there's no activity on the bond, there's no buying and selling of bond from your side, because bond dealer market difficult. When you purchase a bond, then you have to stick to it till its maturity, and whatever you get out of it, if you want to save as consistent investment towards mutual funds, that's up to you, as long as your taxes cover, right? But make sure that you are not trading in the bond again and again, please. Okay, so many of my friends have invested in real estate and they're reporting returns of 15 to 30%. However, a few friends invest in mutual funds and are part of it. Sometimes I feel confused about whether investing in mutual funds and stocks is it good, or should I invest in other assets? So this confusion is coming because you're looking at other people. Number one. Second, that has worked for them in the past. What is going to work for you in the future is what you need to think of, right? Uh, like I said, strive to do more, aim to be consistent, be disciplined. And if you're going to go toward returns, then you're always going to chase asset classes that are always at their peak, right? And look for liquidity. Real estate is not liquid, it's on paper. At least on the mutual fund side, on the stock side, there is a good amount of you know liquidity that is available for you. So let's say if some goal gets met for you, something has happened, that there's some emergency that comes to you, so have financial assets that you can use to fund for it. So I would always say whatever asset class helps you be consistent, disciplined, and it's enough of enough of liquid. then you should go towards that. See, stocks always, you are always hungry for more than. Yesterday, Anand Narayan said that at the time of option expiry, it becomes like a casino. It's like if you put 100, it's a jackpot. That's how people are doing right now. And there are so many investors who are doing F&O, which is not needed for you because that's undue risk. That's bad behavior that people are doing, right? So there's no point. If you aim for the stars, then you get too close to the sun, right? But step by step is what you need to do. That's why we've had this entire part of setting particular milestones, right? Because we understand that each particular milestone requires a different level of mindset, extra efforts. Uh, so naturally, the time you spend at the start has to be much higher, and that's why that's why we discuss every weekend about one particular topic. We try to educate investors every single weekend, and only then you get that confidence and you get that sort of conviction that yeah, this is what I also need to do, this is what I should be doing, and you start focusing on that. So always look for these things in whatever decision that you want to take, and don't look at the rear view, look ahead. That's what we make you do at Milestones2Wealth. We make you look ahead, not at the back. You can learn from what's happened, but what you need to do is needs to be future oriented. So we have enough time here. We have, I think, 5 7 more minutes. So if anybody has a question, please do put it in the chat box. No problem. We still have time. Or if that there's nothing, just give me a thumbs up saying all covered, nothing more, and then we can close. So if there's anything that I've missed out, yeah, I got a thumbs up. Thank you so much. If there's anything that I missed out, if there's anything that you want more clarity on, just send us a hi on this number, and our team will definitely get in touch with you. We have multiple checkpoints, your risk profile. We help you get financially fit. Once you come onto Milestones2Wealth, there will be a lot of hands that work with you. I think already that has happened for SGB and gold because of the import duty cut. So anyway, SGB is supposed to be for long terms. Don't try to do anything to it. Right. Thank you so much for your time. Have a great weekend ahead. If you're not on the program, get on the program now. Send us a hi and our team will get in touch with you. And please do put a testimonial also. We interact with you. We interact with you every weekend, and most of your friends, most of you are on the program. So I'm also putting the link for testimonial. So do rate us. You can put an honest review on Google, and this will help us reach much more people. Thank you so much for your time. Have a great weekend ahead.